How much can you get from Disney Fubo deal? You probably heard the news, and the stock price went up over 200%, quite 300%, as you can see here. And now the market cap is about 1.2 billion. So shareholders who bought this company when the stock price was about $1, they got a 3x on their investment. Easily. But the question is, how much can you get from this deal? Because maybe the stock price can go up even more. And here is why. If you look at the deal, if you read about what they want to do, Disney and FuboTV, Disney wants to combine, as you probably know, Hulu plus live TV together with FuboTV to focus on sports and entertainment. And this combined deal will deliver 6 million subscribers only in North America and over 6 billion in revenue. Only this deal. This is their assumption. If they can achieve 6 billion revenue and you look at the market cap of only 1.2 billion, then the stock price has to go up. But you also have to know that Disney is planning to control 70% of Fubo, and shareholders will get the remaining 30%. You have to understand this. The idea is that if Disney buys 70% of Fubo, you are left with 30% as a shareholders. Now, there are two ways to make money from this deal. The first way is, if Disney pays a higher price than the current stock price, let's say $5 per share, if they pay that premium, you can make a profit. And the second way to make money is from holding the shares, and as the revenue goes up to, or is expected to go up to 6 billion, as you can see here, and also the subscribers to go to 6.2 million, that means if you own 40% of this company, FuboTV, or better said, 40% of this deal, then you are entitled to 1.8 billion in revenue. And you also compare the current market cap, 1.2 billion, with 1.8 billion possible revenue in the future, which may increase even more. You might get another increase in the stock price. That can also happen. The only problem is you don't know how much Disney is going to pay for FuboTV. That's 70% of shares. You have to ask that question. How much are they willing to pay? I'm sure that they will pay a premium. As FuboTV is expected to make 1.5 billion in revenue for 2024, and by the way, this revenue is expected to grow more in the future, then Disney may pay more than this amount. Maybe they can pay 2 billion. So if you assume that Disney will pay 2 billion and the current market cap is only 1.2 billion, they also have an upside, a possible upside from this level, from 1.2 billion to 2 billion. And of course, if you decide to keep your shares, the other 30%, you might get an appreciation after the deal completes. In the long term, if the revenue and number of subscribers keep growing as they expect. So there are two ways to make money from this deal. Disney, or better said Hulu, and live TV plus Fubo. Now, the next question is, what happens if the deal fails? What happens? Well, if the deal fails, still FuboTV will get 140 million in fees, termination fee here. If regulators choose to block the deal, FuboTV will be entitled to a 140 million termination fee. So FuboTV is still well off in both cases. They also get some money in cash, part of that deal, besides the acquisition of 70% of the shares. They will still get 220 million in cash to continue to invest in the business. So for FuboTV, especially for early shareholders who bought at the price around $1.40, they will do quite well in the future. For future investors, you have to assess if you might get a possible upside or an appreciation in the stock price in the long term. So you have to decide for yourself in that case. Now, as I said, if the deal fails, FuboTV will still get some money, but you also look at their business. You can see that they have 1.6 million paid subscribers. And for the full year, 2024, they expect the number to be around 1.6 and 1.7 million subscribers, paid subscribers, and the revenue to be around 1.6 billion. As you can see, an increase of 90% year over year. So this business is still growing. And as they have only 1.6 million subscribers, they have room to grow. Imagine, the US population is over 300 million. So there is a lot of opportunities. Even though they are in a niche, sports and entertainment, there are still a lot of subscribers that may want to buy a subscription, a FuboTV subscription. Of course, the rest of the world, as you can see, the revenue doesn't grow that much, 0% year over year, and a decline in their subscribers, 14% year over year. But as you can see, the total revenue for the rest of the world was about, or is expected to be for the full year 2024, 30 million, 35 million. So it's quite tiny compared to North America with over 1.5 billion revenue. So even if the deal fails, FuboTV will keep growing. They will have the funds, they will get some money in cash, and the revenue keeps growing. And that's great. Now, the next question is, can FuboTV survive? Or better said, will shareholders continue to get high returns from this business? Because if you look at the stock price, you see this amazing performance. 100%, and over the last 5 years, a huge decline. But still, as you can see, the stock price reached $46 per share. Now, this happened because of the number of shares. In the past, you can see here, FuboTV shares outstanding. In the past, in 2021, the number of shares was about 120 million. But now this number is over 342 million. So you won't see the stock price to go back to $46 per share because there are more shares now. The value is divided between more people. You have to take into account that. And the future problem that shareholders will have is this future possible dilution. If the deal fails, FuboTV will get some money, but still they will need more money. But as you can see, they expect to become profitable, positive free cash flow. They said in their earnings call. Here, continued confidence in their 2025 profitability goal. They expect to achieve positive free cash flow, and if they do that, they won't need more money to issue more shares and raise money from investors. They'll be able to fund their operations from their own funds. And that will be great if they can achieve that. You don't have to worry about too much dilution in the future. Something like this, 3x in just 3 years. That will be great. So Fubo can easily survive. They have more ways to raise money. And maybe also the shareholders will do well in the future. As I said, especially if Disney pays a premium $2 billion for that 70% of shares, then the stock price will continue to rise. So that's it for this video. And if you have other questions, please let me know in the comments.